We believe that the best founders are able to sell or kind of storytell in three important functions. First is selling to a customer, drive revenue. Second is sell to a team. You need to build a world-class team. So if we don't believe that this person is, they're kind of a butthead and we wouldn't see ourselves wanting to work for them, it's like other people are going to want to work for them as well. It's going to be really hard for them to attract the best talent in the world. And then the third thing is to be able to fundraise. And each one of those is a very unique thing of like understanding customer need, understanding what a team member might want, and then understanding kind of the greed that goes into an investor. And one of our founders that we backed, his name is Stephen Walter. He's like, my number one job as a startup CEO when I'm fundraising is to inspire greed in an investor. And he's like, and the worst founders that at fundraising, they're not good at inspiring greed. They don't help people see the business opportunity there.
Okay, well, today we've got Trent Mano on the Durable Small Business Podcast. Trent, you are the co-founder and general partner at Convoi, the founder of Utah Tech Week, an awesome event that just occurred a couple months ago. You're probably still reeling from the chaos of that week, but glad to have you on the show. Thanks for spending time today.
Of course. Thanks so much for the opportunity. Good to be here.
We share a dear friend, Scott Paul. We've bumped into each other a million times, been in the same room a lot, but I'm looking forward to getting to know you a little bit better through this conversation. And also just, you have a unique vantage point as a community builder here in Utah, primarily in tech, but just more generally. And so I'd love to also talk about the state of Utah. I'd love to talk about just the state of VC. We're in a weird spot in venture right now. You guys are raising a fund, so you're seeing it from both sides, the fundraising element, but also the writing a check, investing element. So lots of cool things I think we can get into today. But I've been curious about just where your infectious personality and kind of who you are and your upbringing, and you're kind of a breath of fresh air in the venture space. And I'd love to just hear like kind of where you grew up, a little bit about your story. Did you always know you wanted to be in tech, in venture? Maybe give us a couple minutes on just kind of where you come from.
Yeah, absolutely. Yeah, I grew up in the Bay Area, which would make sense for somebody who made their way into tech and venture. Except for I didn't know anything that was going on around me in Silicon Valley and anything like that. I was just a kid living in the suburbs that was terrible at school and really just kind of was more interested in sports and stuff like that. And yeah, so eventually, made my way to here in Utah and to BYU, Brigham Young University. I served a Mormon mission, went to Hong Kong, even though I'm of Japanese descent. So that was every single day of my mission, I had to explain why my Chinese was so bad. And then they'd see my name and they'd see like, oh, you're Japanese, cool, speak Japanese. And I'm like, I'm fourth generation American. I don't speak any Japanese at all. And so just confusing people has been kind of my MO my whole life, I think, is just
Hong Kong's Cantonese, right? Did you pick it up easily?
No, it's an incredibly difficult language. So I did that and then learned Mandarin Chinese and BYU. That and again was a terrible student kind of all through college, and eventually realized that I could test out of some classes and get through a Chinese degree as quickly as possible. So I'm a fourth generation Japanese American that doesn't speak any Japanese and a little bit of broken Cantonese and Mandarin at this point. So
And did you come to Utah thinking you would graduate from BYU and go back to the Bay, or what were your career aspirations at the time? How did you come to Utah? What were your goals with staying in Utah?
Yeah, no, I've lived in different countries, different cities across the U.S., and I've never had more culture shock than coming to Utah. It's a unique place, especially back 20 years ago, But I've really grown to love it. But I definitely never envisioned that I would be here. But I've grown to love it. Grown to love especially the tech and startup community, which as you mentioned, I'm pretty deep into that. But yeah, never envisioned that. Didn't really ever know what I wanted to do. I think kind of all through college, I officially changed my major 4 times and a pretty wide and varied things, from psychology to advertising to graphic design, and eventually landing on Chinese, and then several undeclared my major changes along the way. So yeah, school wasn't my thing, and it took me a while to kind of figure out what I wanted to do, and kind of stumbled into that eventually. So.
What got you into venture? What's that roadmap from graduating at BYU to where you're at today, co-founding Convoy?
Yeah. So graduated from college in 2009. And so obviously kind of in the depths of the recession there, that before the job fair, the job hiring fair, before the recession, they had like 150 recruiters that came. The year I graduated, there was 20 recruiters that were
No
there.
way.
Yeah. And so so there's just no
What a
the job.
signal, by the way, of just how bad it really was.
Right, right. Yeah. And so literally the only job offer that I had was from as a financial advisor. So broke into that as a course of necessity, not because that was like what I had dreamed of doing. I was like, I was a business minor, enjoy some of the classes that I took. So yeah, broke into that and it was very entrepreneurial. So I enjoyed that. Very quickly reconnected with a friend of mine, Ken Free, who was building a startup, and I was like, "Hey, I like these people. This is who I want to spend time with." So that they became the focus of my clientele was working with startup founders. So spent the next 5-ish years just going to every single startup event that I could and getting to know startup founders and being like, "Man, this world's incredible!" And just like falling in love with it, reading everything, following everything on Twitter, to every meetup and just starting to really build community within the startup founders that I served. At the time, the financial as a financial advisor, those founders had $0. They had no money at all. So
Right.
that was kind of like looking back at it, kind of what I look at as kind of like my beginning of my like seed investing journey. It wasn't with capital because I had no money at the time, but it was with the investment in the relationships and really getting to know founders.
Do you remember what
From
you liked about, it sounds like you were just energized by that space in those early
Oh
days.
yeah, totally.
What was it that really attracted you to being around the startup community?
Yeah, the ambition and the ability, the desire to go from 0 to 1 and build something that didn't exist and create a large business from that. I was just like, yeah, that ambition was just so attractive to me and something that I was like, I need to be around these people for sure. So
So you're a financial advisor advising all the wealth of all these startup founders who have no wealth, but
yeah,
surrounding
the
yourself
future
with
wealth, the
with
future wealth, exactly. Yeah.
the startup community. Where'd you go from there?
Yep. So started a community. So our venture fund now is called Convoi Ventures. The first version of Convoy was these trips that we took founders across the country, internationally, et cetera, and really helped them to build relationships through experience and adventure. So did about 20 of those trips. 250 different founders went on those trips.
So wait,
And
just to pump the brakes a little, you
yeah,
essentially started hosting events, destination travel events for founders.
yep, yep,
What
exactly.
was the
Yeah.
goal? And how did that idea even come about?
Yeah, so I mean, I knew a ton of founders just from being at all the events and going to everything, and just trying to build relationships with folks. And one of my mentors, as a financial advisor, one of my mentors said, "We and maybe you'll like this one, but you should always focus on attracting and not chasing." And so this idea of like, hey, I'm financial advisor. I want to tell you all about what I'm doing. They said, rather than trying to chase people, try to focus on building something that they really love. And so yeah, so it became very easy to where, I had these people that I want to meet and created an awesome trip for them where they could meet other founders. And then instead of me chasing folks, they became like I would get referred to these people that I've been trying to meet for a few years, and so it just really flipped the script on its head for me. So yeah, that was the goal. It's just build relationships, and some of them became clients on the financial advising side. But I knew good things happen when you focus on relationships.
And that was kind of the beginning, I would imagine, of your community building experience overall.
Yeah, yeah, that was the real. I was doing some kind of smaller scale events and things like that, but that was like the real thing. Whereas like Convoy was a community for founders, and like people kind of knew it as that. Yeah,
How did Convoy evolve then from what you were doing to what you're
yeah.
doing today?
Yeah, so as soon as Convoy started getting interesting, we that became the main thing. Growing an agency had, around 20ish employees or so. Stopped doing the financial advising thing because that was always just kind of a job. And I was like, so it's just a modest kind of like agency that was working. And then we did the trips and then we started doing events for tech companies and stuff. So, I've done events for people who had no budget to people that, had multi-million-dollar annual budgets and like, okay, how do we make this more efficient? How do we drive business? So really got good at building community, putting on events and things like that. And then COVID hits. So obviously travel and events are among two of the worst industries that we could be in, toss in a hotel and a restaurant. And we've got Got
The
the
trifecta.
yeah, yeah, exactly. So yeah, so that's so shut that down. Joined a Series B ed tech company called Prenda and ran community for them. Then so I was the director of community, and then was founding team of another venture backed startup called Factor, and worked on that while I was starting the venture fund. So been founder of agency, founding team, venture backed startups, and have been operator and stuff. So basically the through line through everything has been how do we use relationships and community to drive engagement, drive growth, and drive business opportunities. But more than anything else, it's just like it's fun to build cool things with people you enjoy being around.
When did the very initial idea of starting a venture fund hit? Because this is a super atypical path
Yeah.
into venture, right?
Yeah, for sure, for sure. Yeah, most people that there's kind of like a couple of standard paths, like kind of get your MBA from a top business school, and then become probably graduate from a great school, go do consulting, get an MBA, and then go in a venture after that, or sell a company for a lot of money, and have a lot of respect from people for what you've built, and so you have kind of been there, done that, seen what it takes, then you have that credibility because you've built it. I didn't have either of those. Like I said, I was bad at school, and didn't do an MBA. Haven't built a massive business. I've started things, but I haven't built anything that's sold for $1 billion. But yeah, it really the backbone of all of it was I've been obsessed with startups and venture for the past 15 years. Read about it in my spare time, and like even before I even thought that it would be possible that I would get in a venture. So I think those have been the big things. And then beyond that, all the relationships that I built, those trips with these founders, those became most of who invested in our fund. So those 10, 12-year relationships, that was never started with the intent of like, one day I'm going to raise a venture fund and these folks will have an exit and they will invest in it. So it was never had that opportunity in mind. But yeah, I was a strong believer that most of the really interesting things that happen in life, personally and professionally, they all start because of a relationship that you never really would have forecasted any sort of ROI on that relationship.
Okay, it's time to take a quick break for two messages. First, if you only know us through this podcast, it might help to know about Durable itself. We are Utah's private community for business owners, part of Dakota Group. Membership is free, events, online communities, and the Durable Dispatch newsletter. But the deepest level of engagement comes through our curated, invite-only peer groups. Most owners face the hardest calls alone, and peer groups change that. Small, hand-picked circles of CEOs and operators who have been in the trenches for real conversations, straight answers, and accountability that sticks. Here's what it looks like. Groups of 8 to 10 owners who meet monthly. You bring your toughest challenges, give and receive advice, and leave with clarity and next steps you'll actually act on. If you want to learn more, request an invite at builddurable.co. Our second message is about Durable's sister company, Durable Finance. Durable Finance was built by operators for operators because we know what it's like to sit in your chair. Think of us as your partner in all things numbers, monthly bookkeeping, cash flow management, capital advisory, and fractional CFO support. Clear reporting, gap compliance, and no jargon. Just the clarity that every business owner deserves without paying CFO level prices. And here's what you get. Books closed on time every month, a monthly financial board meeting, a forward-looking cash forecast, KPI dashboards that actually make sense, and a finance team you enjoy working with. Plans start at $400 a month. Move to Durable Finance. Know your numbers, grow your business. Those are our two messages for today. Thanks for listening, and now back to the program. I'm curious about the startup story or the founding story of
Yeah.
like getting into the mechanics. How do you start a venture fund? You don't go hire a developer and start writing code and start getting clients, but it's very much an entrepreneurial journey like any other. What
Yeah.
was what was the actual story of forming Convoy Ventures?
Yeah, so a venture capital fund, they'll always talk about this thesis. My wife makes fun of me because she's like, "You VCs are like so self-important. I have a thesis about how I view the world." But yeah, it really starts with this thesis about like, okay, what do you believe is the gap that needs to be filled, and why are you the right ones to do it?
Which is just
Uh,
like any other startup. Why should this
yeah.
exist? What are you looking to go solve? And so essentially, your thesis was trying to figure out why does the world or why does Utah need another venture fund?
Yes, exactly. And we've had a lot of success as a venture community here in Utah, startup community. There's been 34 new unicorns in Utah over the past decade. So companies that are worth over a billion dollars. And of those companies, 20 of those did not have venture funding from Utah in the first round. Um,
Interesting.
so so yeah, so and despite that, the venture capital funds here have been phenomenally successful. They've done very well because really you just need one in a fund to make sure that your fund goes really well. So you don't even need to get all of the, but that just showed me like, man, for as well as the venture funds are doing here, we're friends with all of them, respect them all a ton, and work with them all. We said, man, there still is this gap that we can fit in, especially in the very earliest stages of venture capital and startups here in Utah. So we saw that, and my partner Scott, who you already mentioned, he had been doing angel investing for the past decade almost. After he had his couple of exits, had written 70 angel investor checks,
Which is
and
incredible, by the way. I
oh
mean, that
yeah,
is a hyperactive, quote unquote, angel investor. And so it kind of makes sense that maybe I don't want to put words in your mouth, but come together and let's create a firm around this.
absolutely. And yeah, two things around that. Not sure if you knew the name of his thing was Hyperactive Capital, actually. So that
That's right.
yeah, so
Pun not
yeah.
intended, but perfectly placed.
Yeah, no, pun very much intended because
That's
I guess not on
awesome.
your side, but on his side, he's the most ADHD person that I know by far. So the name is very apt for him. But yeah, and Scott, going back to the financial planning days, he was my first client that had an exit actually.
No way.
So yeah, so the relationship goes back a long time. We built our relationship over kind of an initial breakfast that went 3 hours and just really enjoyed each other's company. Had done his He was an investor in momentum climbing gyms here locally, and so we would go weekly and built our relationship through many hours of climbing and stuff like that. So yeah, so it made a ton of sense. We both had been spent a lot of time in the startup community. He had done a ton of angel investing. I had done zero angel investments because I just wasn't at that stage in my career at that point. But I knew that when you kind of put our two brains together, that we would make a really good team. One thing about Scott, to the ADHD point, he's not like an operator anymore. He doesn't get in and really dig in, but he just is like very high level evangelist, connector, just plays a really important role as far as like deal flow and sharing ideas around the community and things. And then I got in and was like, okay, we're gonna operationalize this thing. And then, as time has gone on, I've taken more prominent role in the investment and really lead that part of things now, where Scott is more of kind of like a evangelist, deal maker, that side of a thing. And so yeah, it's been a fun evolution as we've been able to dig in.
And was the thesis essentially what you articulated, that there have been 34 unicorns and the vast majority of which didn't get their early capital inside the state? And that was the hole that you felt like needed filling. Was that essentially the thesis?
Yep, exactly. Yeah, and so we said we took two things that we were going to be ultra rigid on. The first was geography, and we're super bullish, all in on Utah. And then the second was a stage. Great seed and Series A funds here in Utah. And as time goes on, then a lot more of their focus has been on like seed and Series A rather than like very, very early pre-revenue sort of investments. And so we said, we're going to go earlier than everyone else, and we're going to have this hyper focus on Utah. Those are
Why do
going
you
to be the
think
difference.
why do you think that was the gap in Utah at the time? Why did the vast majority of our early unicorns as a state not get their early funding in the state?
It's incredibly hard to pick winners at that stage. And I think like, so one example of a good friend of mine, Ben Miller, he sold a company called Simple Nexus for 1.2 billion in the mortgage industry. He tried to raise from everyone and talked to everyone in Utah, talked to many people outside the state, and nobody bit. Nobody thought that it had legs. He went on to bootstrap that company to 3 million annual revenue. Insight Partners out in New York, they came in and invested 20 million, started to take off even more from there. And then they invested another 100 million after that. And then they eventually sold for 1.2 billion. So it's just, startups are hard. And it's, the long, I'm about 4 years into this now. And the longer I do it, the more I'm like, man, it's a crazy industry and it's really hard to get it right. And so going, to seed Series A instead of that early stage, it's just nice to have some more information. to know if this is working or if it's not. And I don't disagree with that. That it's nicer and that's easier to tell who the winners are going to be. That's just not my nature. I just want to go early. I just want to go early in and find and be kind of the first believer in these startups and these founders. So yeah, it's early stage is very hard.
I want to come back to your founding story of ultimately you raised 6.5 million as your
Mhm.
kind of first. Did you call it a fund or was it committed
Yeah.
capital? What did you call it?
Yep. Yeah. We raised a 6.5 million, just kind of proof of concept fund, and then we're investing out of our next fund right now. So, but yeah, we have it was a lot of talking to friends who, again, kind of the same thing that I did of that we're doing now, being the first believer, was just went to a bunch of friends who've had some exits, had some liquidity, and said, "Hey, we're gonna do this fund. Here's the thesis. Here's what we believe to be true. We believe that Utah's on fire. We believe that there's a gap at the earliest stages." And we believe that we're the ones who will be the ones to not only find the next great breakout startups that are coming out of Utah, but we're the ones that will be that they'll want to take money from, and we'll choose the right ones. And because we have this kind of like sixth sense around like who are the founders that are crazy enough to go after something big and ambitious.
Which is harder, do you think, like raising capital when you've not had any track record like you were in the early days? Or is it harder once you have a light track record? You've been doing it a couple of years, but you haven't seen the full life cycle of a fund. I would imagine both are hard, but what was your
Yeah.
experience like?
Yeah, that's what I was gonna say. I was gonna say they're both difficult, and
Yeah.
I think that there's a lot of similarities to where it's just like it's really just boils down to belief in us. We're early enough to where the track record is. I think it's starting to get really interesting. But when you're 3 4 years into a venture fund, you haven't. It normally takes 5 7 to 10 years to start seeing returns. And so we've got some really good things that have happened on paper, but it's still all on paper. We haven't
Right.
returned capital. And I actually think that that's one of the things that really drives us is like, man, we took our friends' money. Like that's sacred to us. We got to return that capital. And we're going to work our guts out to make sure that that happens.
So maybe Trent, to someone who doesn't know much about venture, other than maybe it's a bunch of Patagonia vest wearing finance bros in Silicon Valley, talk us through the mechanics of a fund. So you raise 6.5 million. You're
Mhm.
not spraying one check of 6.5 million into one company.
Right.
How do you think about check size? How do you think about just a fund overall from a 50,000 foot view?
Yeah, yeah, definitely. Like any, like an index fund, mutual fund, etc. The point of a fund is to get diversification. And so for us, we raised that fund, and then we invested that 6.5 million into 40 different companies. Our default assumption is that 60% of the companies are not going to work out. And so that very early stage, sometimes people hear that they're like, "That's insane." You think that, and it's like, "Yep, that's startups are hard," and that's kind of to that point of that. So yeah, we really believe that it takes a portfolio. And at the earlier stage, some as you get later and later, you're doing like really large positions. You can't have any zeros at all. For us, we were putting 100K checks mostly into these 40 companies.
Wow. And this is the category of pre-seed. Maybe explain the maturation cycle of a company. If they're successful, they'll go get hopefully their first check from a
Yeah.
pre-seed company like Convoy.
Yeah, absolutely. So typically kind of like we're unique in the pre-seed space where we'll invest either before or alongside angel investors. And so mostly we're co-investing alongside, high net worth individuals into these startups. There will be a lot of institutional funds that will raise a fund like we did, and then we'll invest alongside them. So it kind of goes angel investor to pre-seed to series A, B, C, D can get kind of ridiculous along the way. But ultimately, the goal that any angel investor or any venture capital investor is has in investing is to get to an exit. And those exits normally are coming through mergers and acquisition, an acquisition, or going IPO, becoming a publicly traded company. So yeah, that's the goal, and that takes time. That's a 10-year journey that we plan for. We tell our LPs like if you're getting liquidity in the first couple of years, that's normally a bad thing. That's not a good thing, and it's going to be a small amount of capital. But yeah, that's a little bit about the life cycle. And with each successive round, you're giving away, you're taking more larger and larger amounts of capital. A pre-seed round might be 500,000 to maybe 1.5 million. Seed round might be 3 to 5, and then Series C, Series D round might be in the hundreds of millions. investments
Right,
that they're taking.
right. So what is it you're looking for? You mentioned sixth sense. You mentioned like and that feels like the right term because I would bet at pre-seed it's more art than science, but at the same time there's certain criteria that you've got to be underwriting to or at least looking for.
Yep.
Maybe let us into the magic behind the scenes. What do you look for as you're meeting founders?
Yeah, absolutely. The most simple way to boil it down is we talk about that we look for freak founders building in massive markets with massive problems.
Freak
Um,
founders building in massive markets with massive
Problems. Yeah.
problems. Okay,
Yeah.
unpack that for us. How come?
Yeah, yeah, for sure. So the freak founder piece. Actually, let me come back to that because there's that's the most interesting one of that. So massive markets. So they have to be a large enough investment opportunity that this company can sell into it and become, kind of like the minimum standard for companies used to be like, how can they get to 100 million of annual revenue? Now, the with the shifting in the public markets, companies that are going public, it's 3, 4, 5, 600 million ARR before it's kind of even a candidate. And even still, lots of these companies aren't going public. So
So it's got to be a huge market, ton of runway,
yep,
ton of space to grow.
exactly. Yep, yep. So it has to be a massive market in order to get the type of opportunities that we have. So as we're underwriting companies, our first criteria is, will this, based off from the valuation that we're investing in to exit, does it have a 100x opportunity? So if we're investing at something at, say, a 5 million valuation, do we believe that it can get to at least a 500 million or ideally $1 billion valuation? And so we have to believe that to be true. Like default, if we don't believe that to be true, then it's a non-starter, no matter how much we like the founder or anything like that. Second piece of the problems, it has to be a huge problem, and it has to be something that the customers that they're selling to, they have to feel that problem desperately. If it's a nice to have, then we just don't believe that it's going to have the opportunity where they're going to get the adoption that they have. So yeah, the problem space is super important. So first is
And
the
I want to unpack on that before we kind of zoom out and talk about you call them freaky founders. So,
yeah, yeah,
man, I've had companies where we're not solving a just I've heard it said like a shark bite pain point, just a huge
yeah.
problem. And I've had companies where you're solving a kind of more nice to have, more of a vitamin. And I found that just companies that are solving a huge problem tend to see so much less friction. It's just so much easier to sell. Well, can you give maybe a couple of examples of what that could look like? Like, how do you know when you have a startup that's solving a really, really big problem?
Yeah, yeah. One of the there's a founder here locally named Doug from Remy. He talks about, so the phrase that in startup land that we talk about is product market fit. So product market fit meaning the product that you're selling and the market that you're selling to is there's like such strong fit that it's almost like you can't keep it stocked on the shelves. That's that sort of a thing. It's like no matter what you do, the problem is not like how do we sell more of it, but how do we address the demand that we have. That's like the most like poignant version of product market fit. Is not like, okay, we're not in our Monday team meetings talking about how do we sell more of this, what should we do from a marketing perspective. It's like, how do we keep our customers happy, how do we fulfill the demand that we have. Those are the times when it's like really really exciting, when it's like you have such a desperate customer that they just, so the startup is really struggling. Doug Barnett from Remy, what way that I've heard him describe it that I really like is it feels like customers are ripping the product out of your hand. So that visual of like, I'm desperate, what you're doing solves what I need so much, don't get in my way. Just let me have the product, and so that's one of the most interesting things. Another company that we backed that's is called School AI. They're building for schools, teachers, and students in AI, and every single school in the country right now is trying to like, what do we do about AI? How do we have
For sure.
solution? And so they're all it's like, do we ban it? Do we like let them use it? Like, and it's like, well, we can't ban it but we can't just let them have unfettered access to it, and so it's really everyone's trying to figure it out. So this it's like the number one question that everyone's trying to figure out. And the thing that I've learned from unsuccessful ventures that I've had is a lot of founders are like, yeah, this is like one of the top three things that everyone says that they need. It's like, second or third, that's like the worst spot to be in from that, because everyone will say, yes, I need that. But like when it comes to the desperation and the willingness to act immediately to solve the problem, it's like, oh, I got to solve this one thing first, and then I'll come back to you. Like that's the thing where I hear founders trick themselves the most is like, yeah, everyone says they didn't need it. But as they dig in, like, oh, they actually need this thing before that. And so that's what you want to be in, is that thing before the second or third.
Right, because I think the hard part about pre-seed is you don't have a product on the shelves that people are trying to grab out of your hands. And so what
Yeah.
you're looking for is maybe not that, but you're looking for signs that it could be that. Is that a way to think about it?
Yeah, absolutely. Yeah, it's so maybe that's a good transition into the founders of what they're looking for. So when we're talking about these founders, or excuse me, the massive market and the massive problem, the way that you identify that is these freak founders. And so these found like, because it's the hardest thing in the world is to, in startup land, is to find product market fit. And so because of that, if product market fit were easy, startups would be easy, and you'd see a lot more startups that would be successful, and it's really just kind of like keeping everything going as you have startup market product market fit. But the initial insight to, this is a massive market and this is a massive problem within that market, that's the hardest thing, and that's the reason why you see startups flounder and founders flounder, is because they haven't found that product market fit. So it's these freak founders. They're normally above average intelligence, depending on what they're going for. They may be geniuses, may not be. I've seen a lot of really successful founders that are like, you seem kind of like a normal dude, and so there's not might not be anything special about them from an intelligence standpoint, but normally they're at least intelligent enough to identify an interesting market and an interesting problem. They normally have like a high level of communication skills to be able to talk to the founders, to talk to their customers, and pull out what they need, and to be able to communicate that need to a team, to recruiting. And then so we believe that the best founders are able to sell or kind of storytell in three important functions. First is selling to a customer, drive revenue. Second is sell to a team. You need to build a world-class team. So if we don't believe that this person is, they're kind of a butthead, and we wouldn't see ourselves wanting to work for them, it's like other people aren't going to want to work for them as well. It's going to be really hard for them to attract the best talent in the world. And then the third thing is to be able to fundraise. If you can't sell your vision to investors, and each one of those is a very unique thing of like understanding customer need, understanding what a team member might want, and then understanding kind of the greed that goes into an investor and helping them say, this is what, like, one of our founders that we backed, name is Stephen Walter. He's like, my number one job as a startup CEO when I'm fundraising is to inspire greed in an investor. And he's like, if and the worst founders that I at fundraising, they're not good at inspiring greed. They don't help people see the business opportunity there.
So you had $6.5 million back in the founding days. Your goal was to go find, and maybe you weren't articulating it at this time, but freak founders in big markets, solving big problems. What were some of the early lessons learned out of the first few checks you wrote about maybe getting deal flow, about having to decide whether to pick the horse or the jockey, about learning from failure? Like what were some of those early lessons in the first 1 or 2 years as you were kind of back in your own startup days?
Yeah, yeah. I think that the probably one of the startups that we're most excited about right now is a company called Taurus. Taurus was started by Nate Walkinshaw and Gilbert Lee. They're both executives at Pluralsight, which was a multi-billion-dollar tech company here. And they went off and took some time after the exit from Pluralsight, and then they were starting a renewable energy startup, which to most people were like, "How did you go from ed tech to renewable energy?"
Right.
And for me, I said, I think that these are two of the best founders in the state. I don't care what they're working on. I believe that they'll be able to grow a massive company. So these freak founders, I believe that they're among, if not the best founders in Utah. And then also I believe that renewable energy was a massive problem, and something that they could. And so, but they didn't have this. So we just talked about product market fit. They didn't have this founder market fit. They weren't the obvious ones to go and try to solve something in the energy space. But what I believe very strongly is, if you have the best founders, these freak founders, the best ones, it doesn't matter if they have deep expertise now, they will in very quick order gain that expertise necessary to do that. And they're growing phenomenally quickly right now. And kind of knock on wood, my early bet to be the largest company coming out of Utah. So, but yeah, no, that. So I think that's one thing. If you have a great founder, back them. Doesn't matter. It doesn't matter if it's truly like one of the best founders in the world. You back them, kind of no matter what they're working on. I'd say beyond that, one of my favorite questions that I ask founders is, what are you sacrificing to do this? And the ones who are sacrificing the most, they're generally in it the most, and
Hmm.
therefore are have like the most to lose, and therefore will kind of like endure the most pain to get through this. We've had probably 5 startups that I think were maybe 6 months away from really like getting something interesting, and they just like didn't didn't find their way to the other side. And so that was a tough experience for us to see, of like founders that we really believed in, that weren't just able to, for reasons that may or may not been under their control, but for whatever reason they weren't able to get kind of past the hump that every single startup has, is that initial difficulty. So I
I mean,
think
if
that
at the beginning,
that's
like you said, good looks like 60% still failing,
mhm,
you're going to see a lot of failure. So I want to change gears and talk a little bit about that failure component, because those who've gone through it know it can just be incredibly gut wrenching and
yeah,
humiliating and shame associated with failing. But as you said, it's built into the model. In venture, it's so high risk, but so high reward, and
yeah,
so it's very much part of it. I've heard it once said that like you build your reputation on the way down, and you build wealth on the way up. I'm sure you've heard that
mhm,
before. I'm
yeah,
just
yeah,
curious, like, what if, from your vantage point over the years in the space, yes, you see a lot of unicorns and we see a lot of success. They get a lot of the coverage space, but you probably see a lot more failure than you do success.
yeah.
Any takeaways or just lessons learned from watching founders navigate that, where maybe they were a good freak founder, as you call them, and timing didn't work out, market didn't work out? And I'm curious, like, what advice you have for people that are going through that, or just any lessons learned of how to make the most out of a failed time in your career.
Yeah, I'd say the as a pre-seed investor, our default position is there's something that is going wrong right now in your startup. And the only time when we're concerned about that is if we don't know what it is. And so if you are communicating well to your investors and kind of your stakeholders, then there's trust. It's like we know no one's been a part of any business, any professional environment where it's like there's just nothing going wrong right now. It's really cool. There's it doesn't matter if you're brand new startup, largest company in the world. There are
Every
things that are
business has problems, and every business is messy. As a friend of mine, Brent B. Shore, says, "It's like business. Every business is messy because
yep,
fundamentally they're run by people, and people are messy, and so every
yes,
business has challenges."
exactly. So so the ones who don't do well, they hide it, and that's our biggest red flag, is people that hide the messiness, people that charge into it head on. Those are the ones that we trust. So going back to Stephen Walter, his last business failed, his last startup failed, but without fail, first of every month, 7 a.m. We got it. We got a clear communication about the highs and the lows every single month, and we knew what was happening. We had faith that he would do everything that he could to figure it out, and he did. We believe that he did everything that he could, but the business still failed. But guess what? Like, after he shut it down, we got lunch the very next day, and I was like, have you guys been thinking about anything else that you're working on? He's like, this has been a long winding down process. And so, and there's only been so much we can do. So yeah, we have an idea, and they pitched me the idea, and I loved it. And I thought they were the right ones to go after it. I thought that they had a chip on their shoulder from this last one not working. And so in the lunch, I said, We've got a check from me. Go start working on it." And they did, and it's now it's going really, really well. And I wouldn't have had that same confidence had they not communicated very well through the whole thing.
I've seen it so often where, yeah, the dynamic is the founder almost feels like they're on the other side of the table from their investors, and kind of having to only show the wins and the successes, and flipping it so you're seated on the same side of the table with your investors. They're your partners. We all want to see the business succeed, and we
Yeah.
all understand there's failure. And being able to communicate that as a team of, here's what we're seeing on the ground,
Yeah.
and really kind of aligning that vantage point.
Yeah, one of the things one of my phrases that my wife calls them my Trentisms. They're these little like pithy things that I say. But one of my phrases that I think about that helps me understand human behavior a ton is, I think that we're like, fundamentally we're all just little kids trying to look and feel special. And so like the things that make us like scared are like when we make a mistake. When you're a little kid, you break a vase, you hide it and you try to cover it up. It's not that you made the mistake and broke the vase. It's that it's the cover up. That's the problem. And like in our legal system, in business, all of these things, it's the the crime, the mistake, the whatever. That's always never a good thing, but it's always the cover up that's so much worse. And so just like addressing things head on, that's always been the thing that I always tell our founders, like, the, just be open and honest, and we'll work through it together. And the ones that I think that do it well, they are able to even take failure and springboard forward on their career. And the ones that don't do it well, they do lose trust, and that loss of trust that gets out, and there's and and people are like, that seemed like it wound down in a really weird way, like,
That came out of
and
nowhere.
yeah, yeah, it came out of nowhere, and the story that I heard, the story that they're telling, like, the dots weren't connecting, and so people can see through those things really easily. And so, yeah, I think just kind of failure happens and just embrace it. Honestly, for me personally, I've had just as much failure, if not more failure than success. And I'd say that, like, again, I haven't built $1 billion company, but I've had a lot of failure along the way. And I think that, as I'm talking with the founders that we've backed, I can like come from a place of like deep empathy to know what it feels like to run a business that's failing, to run an event business during a pandemic. And it's like, I feel like there's absolutely nothing that I can do at this point, and to know what it feels like to not be able to hit payroll, to not be able to wonder how you're going to position this to your family, and wonder if you're going to be able to like, I felt all those feelings, and like I can feel them so like profoundly right now as I'm talking about
Totally.
those. And like, they're scary situations. And like, that's one of the best things that I think I can do is just be like, hey, there's going to be ups and downs. Like, you'll always, if you're like, if you're doing your best, communicating well, like, you'll always come out better as a result, unless you hide and lose trust from the people around you.
I've heard a lot of people in venture, or just investors generally, kind of describe their role as that shoulder to cry on,
Mm,
or a therapist on call.
yeah.
What kinds of things do you do to keep the what is the right relationship, I guess, first and foremost, with your founders? And I would imagine it doesn't look like corporate board meetings and corporate boardrooms. Tell me a little bit about what kind of conversations you're usually having with your founders.
Yeah, so I mean, so we don't take board seats, and that's a very intentional choice for us. One, with the amount of companies that we back, it doesn't make sense for us to take that many board seats. But two, the thing that I tell our founders is, think of us as who to talk to before you talk to your board. And you're not sure how to think through this, not sure how to position it. Just think of us as like your older brother before you have to go tell your parents
I love
about
that.
the. And so yeah, so we keep this like informal yet very formal relationship. So I think that's a big part of it. The second thing is, we like I'll text every founder that we back is still working at 10 or 11 p.m. We're still early stage. We're still trying to prove ourselves. So I'll just text founders and really signal that, hey, I'm working the same hours you are. We have a founder who's going through a lawsuit right now. He calls me at 1 a.m. and like, he knows that I'll pick up, or at least will respond to it first thing in the morning if I don't see it. So they just know that like, that's the relationship that we have, and we're on the same side. We're not on the opposite sides, kind of like you're saying.
It strikes me that you're really well positioned to be in those conversations with your background, compared to maybe going to the right MBA program, being in finance for a couple of years, and kind of the investor headspace. I'm sure both skill sets, those hard finance skills and
Yeah,
these softer kind of EQ skills, are important, but it
yeah.
seems like you're really well positioned to lean into that differentiator at Convoy.
Yeah, no, that's definitely the thing. I never give anyone advice about how to run their business, but I'm always there to listen to them and handle the human aspect of things. And that's where I feel like we can really be. The phrase, like, it's not personal, it's business. I think that's the biggest lie that
One
people,
of the
or
worst phrases.
terrible
Yes.
people, tell themselves to
Yeah.
mistreat people. I think it's like, there's nothing more personal than business, because it's like tying like your dreams and ambitions back into the thing that's providing your livelihood for your family. And if that doesn't work, then you're like, how am I, like it's so personal. And if you and I don't like doing business with people who don't believe that.
I want to change gears and eventually talk about Utah Tech Week, but I'm kind of curious. You've been at this now 5 years almost, but you've been involved in Utah's tech community for 20, practically, a little less than 20.
Yeah.
How have you seen it evolve, and what's the state of Utah's tech scene today?
Yeah, yeah, for sure. When we were starting, there wasn't anything like any really formal events. There's kind of stuff here or there. 2014, when we started Convoi Events, the travel series for founders, we started that because there was basically nothing really formalized that anyone could have. Around that same time is when Beehive Startup started. That was when, I think when the startup, like as a community, started getting really interesting was 2014. And they did a great job of just covering stories, bringing the startup community together. As they evolved, were acquired by Silicon Slopes, our tech scene really started to grow. They have a marquee event that they did, the Silicon Slopes Tech Summit, that became massive. Mark Zuckerberg came, Tim Cook came, and so like the largest names in tech started coming to these things. And it started to be less about Utah, but a large tech event that happened in Utah. So that's kind of like that was like our maturation, I think, is like we were relevant on a kind of a national and worldwide stage. 20, 30,000 people came to those things, but we kind of lost our space to talk about Utah. So, you mentioned Utah Tech Week. So that's kind of like where we as it went through this, like, okay, we're kind of in our adolescent to maybe we're in our awkward teen phase right now of like kind of trying to really understand who we are, where we've we're kind of independent and we're able to show some of the things that we've accomplished, but still like we're not like fully into like a fully grown ecosystem that is like as lots of public companies, has a ton of capital. It's like a lot of these things we still really need to go to the coast to raise our largest rounds and things like that. So yeah, so we've really seen these gaps that we're trying to fill, and one of those was Utah Tech Week, which is this grassroots festival which we started a few years ago, and it's been kind of I think a pretty important thing for our ecosystem.
How do you explain Utah Tech Week to someone on an airplane? Like if they're
Yeah.
not as familiar with maybe Salt Lake City, Silicon Slopes, where does Utah Tech Week fit into that story? But yeah, how do you explain the festival?
Yeah, yeah. So it's this grassroots festival. Basically, anyone can host whatever they want, whatever event, whenever they want during the week, and it's free to host and free to attend. So it's this thing that like it removes all the gatekeeping, removes all the barriers. Anyone who is trying to be added to the startup and tech community here in Utah, they can host something for their community. So it becomes, instead of this like, okay, go listen to Mark Zuckerberg on stage, it becomes this like, go listen to somebody who's two steps ahead of you in your career, and like that's where you want to be. And so becomes everyone has access and everyone can host and kind of tell their own story. So the first year that we did it, well, the kind of the way it started was I went to LA Tech Week and was in an Uber going from one event to the next, and I was like, man, we need this in Utah. So I bought utah.techweek.com, the domain, we in the Uber, and then we started a few months after that. So really just brought a lot of the kind of key startups and key venture firms in town together and said, Eric, we're going to do this. Everyone can host whatever they want. So their first year, there was 114 events. Last year, there was 197 events. And then this past January, there was about almost 250 events that happened with 20,000 attendees across all of the different events. So, some events have 10 people, very intimate things. Some of them have 50, some of them have 100 or 200 people, but it's really just like whatever community they want to share about, they can create an event for marketers, engineers, founders, people in fintech, people in health tech, whatever it is. Like it becomes this really cool choose your own adventure. And some people go to one event, some people go to 20 events during You can find something that applies to you no matter what stage you're at in kind of the startups, or your kind of own career journey.
So cool. It's cool to kind of see also the role that Utah Tech Week is also playing of trying to validate your thesis in the very
Mm.
beginning of how do we self-fund more of our winning companies? How do we create more winning companies? Does it feel like the thesis is coming to fruition? I'm you're going to be biased in your answer naturally, but it seems like Utah's tech scene is doing nothing but grow up and to the right, and we're getting better at funding different types of companies. at making bigger bets earlier. But what are you seeing from your vantage point?
Yeah, absolutely. Yeah, of course, bias here, but no, we're just so bullish, so excited about the companies that we're backing great founders. One of the things that I'm actually most encouraged about here in Utah is the evolution of younger founders. And I think the first 2 or 3 years we didn't make that many investments into the younger founders. Three of the last six investments that we've made have been into startups where the founder is either just graduated from college or 2 years removed from college. And I attribute a lot of that to a program locally called Sandbox, which is going into the local universities and just saying, okay, you have 2 semesters full time, you work on your startup, you get credit for that, and so it's getting people into entrepreneurship even earlier and giving them the advice, mentorship, etc., that they need to grow their startup.
That's great. Well, as we start to wrap up, I'm curious, Trent, like where does Utah still need to develop? Where are there times when you get a little frustrated with Utah culture and tech, or are there times where we're holding ourselves back unnecessarily? What needs to change as you look forward?
Yeah, we still have this kind of like Roger Bannister 4 minute mile sort of thing that we need to have. We have the from a lot of the companies, so Qualtrics, for example, great outcome, but sold out. I mean, and so they're and is not kind of like public company that's has this
Well,
opportunity
independent.
to become
Yeah.
kind of the household name here. I mean, so we have this barrier that companies haven't really been able to break past the 2, 3, 5 billion mark here locally, which insane companies, insane outcome to be able to create a $2 to $5 billion company so no, obviously no shade on somebody who's built a company that's so many times larger than anything that I've done. But yeah, I think that's what a lot of people here in our tech community have their eye on is like who's going to be the first $10 billion public Utah company. I mean, that's the big thing, and I think a lot of that is this kind of collective ambition rising of people that are and I think that's kind of like our stage of adolescence in is that there are more founders than we've ever had before that have that ambition. So I'm really excited to see the next 10 years. I strongly believe there will be a company that's worth 10 billion plus that we haven't had here before in Utah.
Killer. Well, Trent, as we wrap, what are you excited about right now? What's ahead for you? What's ahead for Convoy? What's ahead for Utah Tech Week? As you look out, maybe beyond this year, but 3 to 5 years, what gets you going?
Yeah. Yeah, our approach to Convoy is, as a community-driven fund, like we want everyone who's Team Utah, we want that to be synonymous with being Team Convoy. I mean, so we're finding different ways for people to get involved. Obviously, to be an investor in Convoy, you have to be somebody who's probably had a large liquidity event. That's not a ton of people here in Utah. We've started an angel investor group, which lowers the bar to people that are accredited investors. And so our goal is within a handful of years to have 1,000 accredited investors that are founders, operators in Utah tech companies and businesses here that have skin in the game and are investing into startups here. Also, we want to lower the bar even further to where we have a scout program that is able to give people access into what does it look like to back founders. Was it So we really think that community, there's a role for everyone to play into the rising generation of startups, and we think that Convoy, that this community aspect will be able to like get everyone rowing in the same direction for Team Utah, Team Convoy. We think that those are going to be synonymous over the coming years, and that will just drive so much growth within our community, our ecosystem, our economy, and that will just and the problems that we solve are going to get increasingly interesting, which will benefit us here locally as well.
Trent, you're busy, man.
Yeah, it's fun. It's fun. I couldn't imagine doing it if I didn't love it, and I think that's the competitive advantage. Is you have to love if you're going after something big, you have to love it more than everyone else, and I truly believe that.
Well, thanks for everything that you're doing for the tech community, for just innovation and entrepreneurship in the state. And I think everyone who is Team Utah wants and needs to see that section of our economy thrive and develop and modernize and scale with the city and the state. So thanks for the role that you're playing with that. And thanks for spending time today. It's been fun to get to know you and hear your story.
Likewise, thank you. Appreciate the time.